What if one of the most interesting AI stocks of 2026 isn't actually an AI company in the way you think? It doesn't manufacture AI chips. It doesn't build ChatGPT. It doesn't own giant cloud platforms. Instead, it connects trucks, vehicles, machines, workers, cameras, and businesses to one intelligent digital system. And that company is Samsara. Its stock ticker is IoT. The interesting part: Samsara is already approaching $2 billion in annual recurring revenue, while continuing to grow around 30% per year. But here's the question that could make or break your investment. After all that growth, has the opportunity already been priced into IoT stock? Or could Samsara still have a much bigger future ahead? Because there is one part of this business that could be far more valuable than the average investor realizes. And by the end of this video, you'll know exactly what it is. 1. What does Samsara actually do? When you hear Internet of Things, or IoT, you might imagine smart watches, home devices, or connected refrigerators. Samsara is playing a much bigger game. Its customers operate in the physical economy. Think trucking companies, construction businesses, delivery fleets, utilities, field services, manufacturing, government organizations, and other companies that depend on vehicles, equipment, and workers. These businesses generate enormous amounts of information every day. Where is a truck? How fast is it moving? Is the driver behaving safely? Does a vehicle need maintenance? Is equipment being used efficiently? Is a delivery running late? Traditionally, much of this information was scattered across different systems. Samsara tries to bring it together. Its platform combines connected hardware, cameras, sensors, telematics, software, cloud technology, and artificial intelligence. The goal is simple: turn physical operations into real-time data. Then use that data to make businesses safer, more efficient, and more productive. And that sounds simple, but at massive scale, it can become extremely powerful. 2. Why the AI opportunity is bigger than it looks. Here's something many investors miss. AI is moving beyond computers and smartphones. It is entering the physical economy. Imagine a company operating thousands of trucks. Every truck produces data. Every driver produces patterns. Every journey produces information. Every accident produces another data point. Every maintenance event creates another signal. Now imagine artificial intelligence analyzing all of that information continuously. Instead of waiting for an accident, the system can identify dangerous behavior. Instead of manually reviewing hours of video, AI can identify important events. Instead of guessing when equipment might fail, companies can use data to improve maintenance decisions. This is what makes Samsara interesting. It isn't simply selling tracking devices. It is building an intelligence layer for physical operations. And the scale of its data is becoming enormous. Samsara says more than 25 trillion data points flow through its platform annually. That creates something potentially very valuable: a proprietary data asset. The more connected operations Samsara serves, the more real-world data it can process. And that data can help improve its AI capabilities. This creates the possibility of a powerful cycle. More customers, more connected assets, more data, better insights, more value for customers, and potentially more customers. But data alone doesn't make a great stock. The real question is whether Samsara can turn that advantage into durable financial growth. And the latest numbers are giving investors an interesting signal. 3. The growth story is still alive. Samsara ended fiscal 2026 with approximately $1.9 billion in annual recurring revenue. That was up 30% year over year. Then came the first quarter of fiscal 2027. Samsara reported nearly $2 billion in ARR. Again, growth was around 30%. That is important, because maintaining 30% growth becomes harder as a company gets larger. Growing 30% from $500 million is one thing. Growing 30% from nearly $2 billion is something completely different. And Samsara isn't relying only on small customers. Its customers generating at least $100,000 in ARR produced about $1.2 billion of ARR. That group was growing 37%. Even more interesting, Customers generating at least $1 million in ARR were growing 62% year over year. That tells us something important. Samsara is moving deeper into large enterprise accounts. And large customers can create a powerful expansion opportunity. A company might begin with vehicle tracking, then add cameras, then asset monitoring, then maintenance, then routing, then workflow management. The customer doesn't necessarily need to find another software provider for every problem. Samsara wants to become the platform connecting the entire operation. And that leads directly to another major part of the investment story. 4. The expansion machine. Imagine a transportation company using Samsara for 1,000 vehicles. Now imagine that company starts using Samsara for trailers, then equipment, then driver safety, then maintenance, then workflow management. The original customer becomes much more valuable. This is called expansion, and it can be extremely powerful for software companies. Because acquiring a new customer can be expensive, expanding an existing relationship can be much more efficient. Samsara has been emphasizing this strategy as customers increasingly connect more parts of their operations to the platform. That means the company's future growth doesn't necessarily depend entirely on finding millions of new customers. It can also come from doing more business with customers it already has. And this could become especially important as Samsara moves deeper into large enterprises. But there is another development that could change the investment story. Profitability. 5. Samsara is becoming more profitable. For years, high-growth technology companies often faced the same criticism. Great growth, great revenue, but where are the profits? Samsara is starting to answer that question. The company achieved its second consecutive quarter of GAAP profitability in fiscal 2026. Then it reported its third consecutive quarter of GAAP EPS profitability in the first quarter of fiscal 2027. That's a major development. Because if Samsara can continue growing rapidly while improving profitability, the market may eventually view it differently. It would no longer be simply a high-growth software company. It could become a high-growth company with increasingly durable earnings power. And that combination is exactly what growth investors want. But now we have to discuss the biggest problem. The stock price. 6. The valuation problem. A great company doesn't automatically make a great investment. Price matters. If investors become extremely optimistic about Samsara, the stock can become expensive. And when expectations become too high, even strong results may not be enough. Imagine Samsara reports excellent growth, but investors expected even better growth. The stock could still fall. That's one of the biggest risks with high-growth companies. The business can perform well, while the stock performs badly. Why? Because the market is constantly comparing actual results with expectations. There is also competition. Samsara operates in a competitive market involving telematics, fleet management, video safety, asset tracking, and enterprise software. Large technology companies and specialized competitors are constantly improving their products. Samsara must continue innovating. It must keep customers satisfied. And it must prove that its platform delivers measurable returns. If growth slows significantly, valuation could become a serious problem. So the bear case is very real. But there is another question. What could make the bull case even stronger? 7. The massive physical economy opportunity. Here's the part that makes the long-term story interesting. The physical economy is enormous. Millions of vehicles. Millions of workers. Millions of machines. Thousands of companies. And huge amounts of activity still operate with fragmented technology. Samsara believes the digitization of physical operations is a multi-decade opportunity. And that is a much bigger market than simply fleet tracking. As companies become more focused on safety, productivity, fuel efficiency, maintenance, compliance, and automation, connected operations become increasingly valuable. AI could accelerate that transformation. Instead of simply collecting data, businesses can use AI to understand it. And eventually, they may use AI to automate decisions. That could expand Samsara's role from a monitoring platform into something much more important. An operating intelligence platform for the physical economy. If that vision becomes reality, The opportunity could be considerably larger than today's business. 8. So, is IoT stock still worth buying in 2026? Here's my view. Samsara is one of the more interesting growth companies to watch in the AI and IoT space. The business has strong recurring revenue. ARR is approaching $2 billion. Growth remains around 30%. Large customers are growing even faster. The company is becoming profitable. And its proprietary data advantage could become increasingly valuable as AI becomes more deeply integrated into physical operations. But I would not ignore valuation. That is the biggest warning sign. If IoT becomes extremely expensive relative to its growth and future earnings potential, the margin for error becomes smaller. For long-term investors, the better question may not be, will Samsara grow? The better question is, how much growth is already reflected in the stock price? That distinction can make a huge difference. The bull case is compelling. AI is spreading into the physical world. Businesses are digitizing their operations. Large customers are expanding. Recurring revenue is growing. And profitability is improving. The bear case is equally clear. Competition is intense. Growth eventually slows. And a premium valuation can create significant downside if expectations are missed. So, is Samsara stock still worth buying in 2026? For investors who believe the physical economy will become increasingly connected, automated, and AI-driven, Samsara deserves serious attention. But this is not a stock I would blindly chase after a big rally. The company may be excellent. The investment still depends on the price. And that is the lesson investors should remember. Sometimes the most important question isn't whether a company will win. It's how much you're paying for that victory. Samsara could become one of the most important software platforms connecting the physical economy. But the next few years will determine whether its stock can grow into today's expectations. And if the company successfully combines 30% growth, expanding enterprise adoption, increasing profitability, and AI-driven products, IoT could become a very different company from the one investors know today. If you enjoyed this analysis, subscribe to WallStreet Pulse. We cover AI stocks, growth stocks, technology companies, ETFs, and the businesses that could shape the next decade. And remember, the biggest technology opportunities aren't always hiding inside the biggest technology companies. Sometimes, they're hiding in the physical world around us.